everyone, welcome guys, welcome. Hey, this is our Saturday class or beginners class. Welcome everyone, welcome. Let me go ahead and share my trading screen here. All right. Hey Louis, welcome Louis, welcome. Hey Solomon, welcome. All right, guys. As you know, on our beginners class, we go over some of the basics. All right, fundamentals as far as trading. All right. Um, those of you who've been with us for a while, this will be a refresher, and it's always good to get this information over and over. As you guys know, trading is repetitive, right? So we do the same. Markets might change, right? But as far as our process, we do the same thing every day, and we use a systematic approach. All right. So for new traders, I always recommend to new traders this book you guys should see on my screen here, Trading in the Zone. All right. Trading in the Zone by Mark Douglas. All right. I highly recommend this book. All right. A lot of our traders that do our one-on-one coaching with us, we use this book as part of the process. All right. So, and we do give it free to our coaching students, Trading in the Zone by Mark Douglas. How to master the market or markets with confidence, discipline, and a winning attitude. All right. So recommend get that book. All right. There's also a free audio book that you can find on YouTube. So after you're done here, just go on YouTube, do a search. Trading in the Zone by Mark Douglas. How to master the markets with confidence, discipline, and a winning attitude. All right. Well worth it to go through this. If you've been with us before, if you've gone through it, I recommend continue to get that information. All right. Especially the audio book. All right. So in your downtime, you're driving, right? You can just listen to the audio book. All right. All right. The next tip I'm going to give you guys or tools is support and resistance. All right. So support and resistance, the keys to your success. All right. So support and resistance, the keys to your success. And what we'll do this morning here is we'll go through some examples. All right. We'll look at live charts and we'll look at how we tie in support and resistance with our everyday trading. All right. So we'll look at support and resistance and also the 4 market phases. And we'll tie in that with real-time charts for the week. All right. So support and resistance are the keys to your success. Support and resistance are the keys to your success. Most of you guys have heard of support and resistance. All right. If you haven't, just know that this is your foundation, right? Everything will start from support and resistance. Even if you've been trading for a long time, still trying to figure things out, or if you're brand new to trading, just know that support and resistance is very important, the keys to your success. So I always tell traders, if you don't have this, take a screenshot of it. All right. I recommend and take a screenshot, print it when you have some time, and get it laminated so you have it, so you don't forget. All right. Support and resistance, the keys to your success. So let's go through it. All right. Think of resistance as your ceiling right here, support as your floor. All right. And price, right? Price is not random, right? Everyone thinks that, trading is gambling and, markets just do whatever they would like to do, but that's not the case, right? All right. There's a systematic way that price moves, and support and resistance allows us to gauge, right, buyers and sellers. And when buyers and sellers are taking a break, all right, and when buyers are getting into the market, or sellers, or we call them short sellers, are getting out or shorting the market. All right. So resistance and support, or support and resistance, just know that price is taking a break. It's resting. All right. And that's our opportunity to rest also. All right. As traders, the majority of the time, right, we are waiting for opportunities. We're not always trading. All right. So 80% of the time, a large percent of the time, we are waiting for buyers to enter the market. All right. So think of support and resistance. When we have support and resistance, the price action is what we call it. Price action is resting, taking a break. All right. Which allows us to also take a break. All right. All right. Thanks, Louis. You've seen. All right. So let's do that. Thanks for letting me know. All right. Okay, so you guys should see my screen now. Thanks, Louis. All right. So yeah, so support and resistance. All right. So again, just there are different ways to think of support and resistance, right? We can look at support and resistance, and if the price is breaking resistance, right, we can buy. We always tell our traders to buy on a break of resistance when the price is breaking resistance, sell on a break of support, right, when the price is breaking support, or you could go short. But what I would like you guys to take today is that within support and resistance, price is taking a break. All right. And this is our opportunity to now also take a break, right? Whether it's on that particular instrument, whether it's Forex, crypto, stocks, or even the market, right? The general market will go through what we call a consolidation, all right, between support and resistance. Okay, so just remember, right, support and resistance, we want to buy on a break of resistance, sell on a break of support, but we also want to treat this area here as an area to wait, be patient, wait, 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 wait for the sellers, all right, to either get in, go short, or the buyers to break resistance and move higher. All right. There are traders out there that will trade between support and resistance. All right. So they will trade from here to here. All right. Here to here. You can do that, but just know that you limited your trading when you do that. Right. So you're trading within a tight area here. All right. But just know when the price breaks resistance, buyers are in control. So we want to buy on a break of resistance, sell on a break of support. So we want to buy here, sell here. This will be when you trade and you understand support and resistance and you trade around support and resistance, this will be your lowest risk, right? Or your low risk entry and exit. All right. All right, it doesn't get any better than this. This is going to be your best area here, right? When you buy at resistance, sell at support, you will minimize your losses when you do here, right? When you trade between support and resistance. As the price moves higher, right, and resistance gets away from you, guess what? All right, you don't have that low risk entry exit anymore. All right, as that price moves higher away from resistance, right, your risk increase. So just remember that. All right, so resistance right here and support. We want to buy on a break of resistance, sell on a break of support. But just remember, this is an area for price to take a break. All right, and this is an area for us to take a break as traders also. All right. The next chart I'm going to recommend. All right. Is the 4 market phases. And rather than just looking at this as your roadmap, we can look at this as a way to, especially those of you who've been with us, right, trading for a while. You know, we can use the 4 market phases. You guys know, first phase is accumulation phase, right? Second phase is the markup phase. Third phase is the distribution phase. Fourth phase is the markdown phase. All right. And within the accumulation phase, right, this is where, right, you have resistance here and support. All right. This is where we would wait. All right. Wait for the price to break resistance. And now we're in the markup phase. All right. Now, I've been working with some of our futures traders, right, in the last few weeks, because we've launched some really exciting new futures systems. All right. And the cool thing about futures is that it moves, right? It has a lot of volatility. Okay. So normally within the markup phase, we would have to wait for resistance here and support to come in to then add to our position. Now with futures and some of our faster moving markets, right? And with trading in the zone, if you understand what we do with trading in the zone, right? We want to get in the zone. All right. So rather than waiting for that reaccumulation phase to add to our position, right? You can actually feel the trade, right? Feel that volatility coming. All right. And some of our traders, like I said, have been with us for a while. I want you guys, especially our futures traders, right? In that markup phase, we want to be buying. All right. So accumulation phase, we want to wait. We want to wait. Price breaks resistance, right? All along that markup phase. All right. All along that markup phase, as long as price is moving up, I want you to feel that price action moving and just continue to buy, all through that markup phase, reaccumulation phase. So you don't necessarily have to wait for a break of resistance. When you do get a break of resistance, that's good, right? Understand that's new buyers entering the market, right? And that will cause price to move higher. But all along here, we could be adding, right? Anticipating that break of resistance right here. And then third, we've got that distribution phase right here. All right. When we add in that markup phase, right? So we're scaling up with positions, and this is advanced, right? I know this is a beginner's class, right? But it's good to know what to work towards, right? So as we add in, when the price, right, hits the top here, right, resistance, right, can no longer go higher, break support, we have to get out here. Just close all your positions, all right? And some of our traders have done really well where they're just taking profits, right? Getting in, bigger positions, getting out. Again, this is a bit advanced, all right? But the goal is to start small, start slow, and gain the experience and knowledge to then move higher in your trading. All right. And then the markdown phase, you guys know about the markdown phase. All right. Where sellers are coming in. All right. Just know that, hey, we can short this markdown phase. So rather than staying out of the market, right, we can short the markdown phase and make money as the price goes lower. All right. So accumulation, markup. All right. But markup phase, we're going to be buying, right? Within that reaccumulation phase, new buyers are entering the market, right? Distribution phase, we should be closing out of positions. All right. Redistribution phase, we're going to be going short in the market, right? Red, see, markdown phase, red here, right? Short in the market. All right. And then after that, we start all over again. All right. So we start all over again with the accumulation phase. And I want to talk about that accumulation phase. Let's go back, share that screen again. All right, so in that accumulation phase right here, we start all over again. You guys will notice, we're going to go through some examples, and you will notice that right, a large percentage of your trading instruments will do this. We'll start here at the bottom in the accumulation phase, go through that markup phase. All right, stop at that distribution phase, right? Head down that markdown phase, all right? And then start all over again with the accumulation phase, all right? And we'll see that over and over, all right? So, the goal is to understand if it's in the markdown phase, the next phase is the accumulation phase, and we should be waiting, all right? So if we're not shorting the price here, we can wait patiently, right? Don't rush the trade, right? Don't chase the trades, right? Buy up here. We need to wait, right? Wait for the buyers to come in, break resistance. All right. So there's always an opportunity. I guess that's my point. All right. There's always an opportunity for a new instrument. It might not be the same instrument that you're trading, but there'll be another instrument setting up right in that accumulation phase to trade higher. Okay, so but just understand this: trade accumulation 1, markup; distribution 3, markdown 4, and then it starts all over again. All right, so let's take a look at some examples. I want to go through some examples this morning here. So we're going to follow support and resistance. All right, support and resistance. All right, and we're going to go through some of the phases here. All right. All right. So this is the markdown phase here. This is the dollar pairs, right? And so we would be shorting the dollar pairs. All right. So for new traders, just know that we can make money as the trade moves lower. Okay. Now we are using our trading system here, which tells us, gives us a buy signal, which is this arrow here when the price breaks support. All right. So just remember, we always buy or go short in this case. All right. When the price breaks support, buy to cover. All right. Or exit when the price moves higher. All right. So in the markdown phase, this was the markup phase here. And let me do this. We'll add on this chart the buy signals. Just for this example. All right. So we'll start with this. Let's see here. This buy signal here. All right. So this buy signal here broke resistance. All right. All of this is your markup phase. All right. So for new traders, the goal is you want to buy on the break of resistance. Right here, the price broke resistance here. These lines are our resistance lines and our support lines. All right. So here is where we broke resistance here. Right. We got a buy signal to now enter the market. And then here is where the price broke support, this line right here, to now get out. All right. But all during this process here, this markup phase, all right, we need to be buying. Now, brand new traders, just that one trade is fine. So entering here, exiting here, that's all you need to do. For some of our advanced traders, all right, especially our futures traders, when in that markup phase, you don't have to wait, right, to break resistance. All right, you can be as these big candles come in, you can add, and then obviously take profits also. Okay. All right. Then guess what? Price will break support, which it did here to exit. Waited. All right. Sellers came in, price broke support, and we went short here. All right. So markup phase, distribution, markdown phase. All right. Here we've got accumulation, buy signal, that price failed. All right. And price broke support. All right. And we got out here. Now, that was a for loss, profitable trade, losing trade. All right. And I know as brand new traders, we don't want to take losses. All right. But understand when you start trading, right, you will take losses. It's just part of what it is. Okay. We're testing the market, testing. The goal is we want to have small losses. All right. So this is a small loss. All right. And these are large wins. So we want big wins. All right. Big gains, big profitable trades, and small losses, managed losses. Right. And like we talked about, managed loss, right? Your smallest loss will come from, right, between support and resistance. So if we look at it here, so it's not always, right, about getting a winning trade. It's also about managing those losing trades. So here was our buy signal here. And we won't go too long today. All right, I just want to get this across. So our buy signal here price broke resistance. All right, sellers came in, failed. All right, price broke support here. All right, sell signal here to get out. That's your loss here. That's a controlled loss when we trade, right? And we use support and resistance. So a lot of brand new traders, you will not have support and resistance lines on your chart. All right. This is a proprietary system that we use, that we build. All right. So you have to manually draw in your support and resistance lines, right, to allow you your buy entries and your sell, right, your exits right here. All right. The worst thing we can do as traders is, all right, let's say, for instance, you bought here and the price does this, broke support here, and we don't get out, right? When the price breaks support, this is what can happen. So now our buy entry would have been here, and then sell entry, exit or waiting to exit would be all the way down here. And that's not controlled loss. All right. That would not be a controlled loss. All right. So what we did was, in this case, we got out of the long, went short. Here's the sell short signal. And right now, very good profitable trade. All right. This profitable trade, and this profitable trade will pay for this loss right here. All right. There's several concerns that new traders have. Entering, when do I enter? When do I exit? But the biggest fear that all traders have, right? Whether we have an experienced trader, or a brand new trade is those losses, right? Those losses. Our goal is as traders is to have a rule in place, all right, that's based. I know this is a bit technical right here, but based on buying when buyers come in, when the price breaks resistance, and get out, exit when the price breaks support. All right, there's no other way to do it. I mean, there are other indicators out there. All right, but most traders, really good traders, use support and resistance. The terms might vary, but it's the same thing. Okay, and the goal is this: we just want to make sure we get in, right, when buyers are buying, price is trending, and go short, all right, or stay out of the market when the price is going down in the markdown phase. All right, let's take a look at another. Any questions for me? Any questions for me, guys? All right. All right, we'll take a look at a few more examples here. We always, as traders and as new traders, especially, we always need to trade within the trend. So understand that the trend is your friend, okay? And you want to trade in the direction of the overall trend, okay? So what I'm going to do here, I'm going to bring in the buy signals for the markup phase. All right. So this is the markup phase. From here all the way up here is the markup phase. So remember I said we should be buying in the markup phase. And, we use our trading systems, right, to give us our signals, but we can also use it as a guide. All right. So if you look here, these blue arrows here, that's our buy signal. White arrows here is our sell signal to get out. So we bought here, sold here, bought here, sold here, bought here, sold here. But if you guys look here, right, here's a sell short signal to go against the overall trend. All right. So a sell short signal, we should be shorting in the markdown phase, not in the markup phase. And look what happened, right? That sell short signal did not work out, right? We had to cover, right? We had to cover. This was a losing trade. All right. Now, if we did this, if we turn off, if now we turn off our short signals, you'll notice that we only had nice, smooth buy signals all along that markup phase. All right. So just remember in that markup phase, not that you can't have a loss when you buy or go long in the markup phase, right? Just know that it's the best trade, right, is to go long, keep buying in the markup phase. All right, and vice versa, right? In the markdown phase, we want to be selling, going short, right? Getting out or going short. We do not want to buy, right? Buy in the markdown phase. Can you get lucky? Absolutely, right? You can get lucky, but we want to go with the momentum, with the trend. All right. All right. We'll look at a few more examples here. If you guys notice, A lot of new traders, especially, will trade. And I call it trading blindly, right? Where you might trade this. Now, this is Forex, but you can take that same principle to stocks, futures, any market. All right. Um, what what we've found over the years, it's that rather than trading one instrument, okay, look at a whole basket of instruments and how they're behaving, how they're trading. All right. So the whole basket. For example, and as new traders, this will certainly help you, right? All right. So you can look at the sectors, how the sectors are traded. All right. How the sectors, like the tech sector. All right. So rather than just one stock, your Apple stock, look at the whole sector. All right. Or your healthcare stock, right? Look at the whole sector. What's the sector doing? Or energy, right? Right. A lot of traders don't pay attention to that, right? Especially new traders and even experienced traders. So pay attention to the environment. All right. The environment. So for stocks, right? The sector, how is the sector doing? Right? How is the overall market doing? Right? So how is the Dow, the S&P, the Nasdaq? Right? Most of a large percentage of your stocks, 80-90% of stocks will follow the Dow, the S&P, the Nasdaq, and the Russell. Okay, so pay attention. It's not all about your favorite stock, right? It's how the market is doing, right? Because your stock will follow the broad market. Again, the Dow, the S&P, Nasdaq, and the Russell. Your stock, your favorite stock, or your cryptos also will follow, right, the equity market. So pay attention to the environment that you're in. All right. You don't have to become a fundamental trader, right? It's not all about, there's fundamentals that's built into the price action, but you need to understand the other what other markets, right? Or other instruments that might influence your trade. Okay. So if we go back here, for example, and I've come across so many Forex traders that only trade their favorite pair. All right. So they might trade the pound, right? Pound dollar, very favorite, for traders, euro dollar. All right. All right. So um, just know that it's better, not that it can't be done, but it's better when you follow the group. All right. So as an example here are the dollar pairs. And if you guys notice that all of these dollar pairs are red and going down, right? So they're red and going down. So you could just pick one. Look at these dollar pairs. You can just pick one. And guess what? There's a good chance it will go down. Let's say this wasn't here. You did not have this information here. Right? And you're looking at the chart like this, right? So now you're totally blind, right? You're totally blind to the market, right? What the dollar pairs are doing, what the yen pairs are doing, and that's most new traders, all right? So we need to know, right, what that whole group is doing, and that will reduce or minimize the risk, all right? Because we're now going, right? We know that all these pairs are in the markdown phase. All right, markdown phase, red down, right? Markdown phase. So we should be waiting or should be out? All right. Those of us that are waiting, right? So those of us that are not short, one second here, and waiting, we know what we're waiting for. All right. So if we're short, if we go here, let me find a good one here. Huh. All right, I get, yeah, this is a good example here. If we look here, all right, and I am almost done, guys, almost done here. All right, so if you look at your 4 market phases, right, that every trader must know: accumulation, markup, distribution, markdown, and then starts all over again with the markup phase, with the accumulation phase, I'm sorry. All right, so accumulation, markup, reaccumulation, this is your roadmap, distribution, markdown, within the markdown phase, redistribution, and then accumulation phase. If we now take this to our chart here, we can wait, all right, because we know what's coming next. All right, so here we are. All right, so we've got, let's bring this back. We've got the accumulation phase right here, right? Price broke resistance, all right? Our buy signal to now enter the market. This is the markup phase. We should be buying, right? This is reaccumulation, right? Right? Give a sell signal, but guess what? Buyers came back in, buying. All right. So we could be buying all through here. That's the markup phase. Now follow me for a second. We'll be done in a minute. So here is the markup phase here. USD CNH, but it doesn't matter. Any instrument. All right. So accumulation, price broke resistance. Our buy signal was here. Should be buying. All right. All along here, that's the markup phase, reaccumulation. Finally, the price never made new highs. All right, broke support right here. Here was our sell signal to get out, broke support. And now let's go to the short side. All right, so here was our short here to now go short. All right, let's do this on the same chart. All right. Okay, so here's the short. Now, once this short close, right, we should be waiting, right, patiently, because we know what's coming next, right? So once this short close, we could be in short, right, making money as it goes short. At some point, that short will close, right? Short will close, price will go through an accumulation phase again, all right? And then give a buy signal like it did here, all right? So just remember that price is not random. They go in sequence, And if we follow, right, those phases, we'll have a good chance for success. All right. One second here. Here is another good example here. Here, markdown phase. Let's bring in a sell short signal here. And the goal is to get to the point where not that you're beating, right, the buyers when they come in, but you can anticipate when the buyers are coming in and when the sellers are coming out also. Okay. All right. So that's why we have to have follow a process. Okay. Look at this here. And I know as new traders, we don't want to take those losses, but it is what it is, part of it. All right. We only have about 5 more minutes here. All right. So we'll start here. Yeah, we'll start. Let's start right here. So when short here, all right, this is the markdown phase. Price broke support, right? Buyers came in. We had to cover here. So a profitable trade, right? Whether you have a system like this, it's the same. That price action here is on the 240-minute time frame. That this price action here is the same price action that you will see on any chart for the Aussie dollar. All right, we don't change. We don't change the price action, right? The price action is the same. Now we've color coded it, right? We've put our systems to work, but it's the same price action. On this time frame, on the 240, there's only one way to trade it. All right, markdown phase, markup phase, markdown phase, markup phase. Right, we try to stay away from that consolidation phase in here. Right, we try to get right when the price breaks out, try to stay away from here from consolidation. Here was a losing trade here. The price did break support, right, but it went back, right, went back within support and resistance, and now we had to exit. All right, but this is a very good trade. A lot of new traders don't understand this. All right, this is a very, very good trade. It's a good trade because we did what we were supposed to do, right? Go short when the price breaks support, and then we have to buy to cover when the buyers enter. All right, very good. This trade here is a much better trade than this trade. Even if this is a losing trade, all right, this is a much better, if you can say it that way, a much it's a managed trade, all right, very managed trade here. All right, you know, as new traders and as most traders, when we trade, we want to get those wins, right? We want to get those profitable trades, but it's the losing trades, right, is what will hurt us if we don't manage those losing trades. So this trade here, yes, we'll take sell short here, buy to cover, very profitable trade. Bought here, sold here, very profitable trade. Sold short here, buy to cover here, very profitable trade, right? Bought here, is all the way up here, very profitable trade. But is this losing trade right here? is perhaps your better trade. Okay, because it's a well managed trade. Remember, I mentioned earlier, right, that your smallest loss, your best loss, will be right between support and resistance. All right, your best trade, your best loss, right, your best loss, right, will be between support and resistance. All right, so most traders, new traders, and you guys as new traders, just you have to be aware of this, right? If you get into the trade and it goes against you, if you go short and it goes against you, if you do not get out, right, on a break of resistance where buyers are entering that market, coming in, right, strong, right, that you can be in a bad situation very, very quickly. All right, because now you're not in seller's territory, you're in buyer's territory. All right, and if you stay there long enough without getting out, and I know as traders, new traders, we don't want to take that loss, whether it's $20, $200, or $2,000 or $20,000. We don't want to take that loss, and we hope that the price will come back down, allowing us to get out. Well, that's usually in most cases. Sometimes you might get lucky, but sometimes, in many cases, right, that will not happen. Buyers will now take over, and your short position is being squeezed, forcing you out of the trade. Okay, so just know that you manage your trade between support and resistance. Support here, right here, exit right here. All right, and then go long. Switch the trade. Switch the trade. Be flexible. Switch that hat. I say switch that hat. All right, go from short to long. All right. All right. So the main thing today, just think about that as new traders, and just know that accumulation phase, that consolidation, we call it accumulation, consolidation, distribution, is for the price to take a break, but it's for us as traders also to take a break. All right, we can trade 24 hours a day, every hour of the day. So as the price, and just know that as the price takes a break, right, during the accumulation phase, consolidation, right, those are traders that are taking a break, right? So we have to take a break also. All right. All right, guys, thanks for coming. All right, to our beginners class. We'll start fresh, a new week tomorrow, Sunday. All right, so I'll see you guys tomorrow evening. All right, enjoy the rest of your weekend. All right, and I'll see you guys tomorrow. All right, take care. Have a good weekend. Bye-bye.